everyone, welcome to iExamB. Here we are back with another interesting video for you. Whether how is the country's national income gets impacted. So we all know that the movie RRR song, in the movie RRR, the song Naatu Naatu won the Oscar award. So how do you think is it going to impact the national income of India? Whether is it going to impact the national income of the country directly, or it can have other effects? How will the national income be impacted? And we will also look at how the national income is calculated for the country and what are the various measures. And towards the end of the video, I'm also going to talk about some related inclusions and exclusions in national income, what all things are actually included and what are the things which are excluded from the national income of the country. So let's start the video. Here I'm going to talk about whether the money that is earned by any foreign actor, for instance here in this song Olivia Morris performed in the song Naatu Naatu. So whether that money that Olivia Morris earned in this particular song Naatu Naatu, will that be considered part of India's national income because she performed in an Indian movie? So what do you think? Any guesses, any comment in the live section that I can see? What do you think? Will that be part of India's national income? Yes, anyone who would like to comment whether this would be part of India's national income? The money that Olivia Morris earned. See, she's a foreign actor. She worked in the Indian film industry, and that is why the money that she earned in this song, that would not be considered the part of India's national income or India's GDP, because GDP or the national income, that is a measure that tells you the income earned by the residents of the country, the national income, right? So even if she earned some money by performing in this movie, which is an Indian movie, and the movie also won an Oscar, that her income would not be considered part of the India's national income. So what exactly is national income and how is it really calculated? That is also another question that we are going to look at. And how does the income which is earned by an Indian film industry that contribute to India's economy, what impact can it have on the Indian economy? Whether the income that is earned by the Indian movie, is it going to impact the India's economy, the national income or not? And basically the recognition that any Indian movie receives by, like in this case, the movie won an Oscar for this song Naatu Naatu. So do you think that it is going to have an impact on the country's economy? Does it directly have an impact on country's economy, and whether really cash is earned or some reward is given as Oscar? So in actual, the rewards are given. There is no direct cash transaction. So how is that reward getting impacted on the country's economy, the national income? These are some things that we are going to look at. So let's say some of you are answering money earned by Ram Charan will be considered. Aniket Singh. Okay. Yeah. So basically here, let's understand what exactly is national income. So national income tells you how much is the total value of the final goods and services that is being produced by residents of the country. So it also includes goods as well as services, right? So it's the market value. We look at it at the market value. And why we are looking at it at a market value? Because it's easier to add up those value, because it's a monetary measure. So it's easier to add up those values across sectors, across different sectors of the economy. And why do we take final goods or the consumer goods? Because final goods are taken because it will, if you take intermediate goods also and add up to make the total value of the national income, then it will lead to double counting. So it's better to take only the final goods so that you can avoid any kind of double counting. And these final goods does not require any further processing. These are directly given to the consumers. So that's why you have to consider the final goods, and also to avoid any kind of double counting that could be there. So basically we know that the money that would be earned by Olivia Morris, this foreign actor, this does not come from working in an Indian film, that comes from working in the Indian film RRR. This would not be a part of the national income of the country, because she's not a resident of India. That's why it would not be considered part of India's national income. But there is a possibility that it can indirectly affect India's national income. That also we are going to talk about next. But first, let's understand what are the different methods of calculating national income. So broadly, there are three methods of calculating a national income of a nation: the product method or the value added method, the income method, and the expenditure method. But why there are three methods? Because generally, through the circular flow of income, we know that whatever is the production that happens in an economy, that generates a certain amount of income, and this income is then in turn used for expenditure of different consumer households and firms. So in turn, basically all these three aspects, the production, the income, and the expenditure, are in some summary equal to each other. That's why we can have three methods of calculating national income: the product method or the value added method, the income method or the expenditure method. Now, in the product method, what do? We add the value added of different products or the goods and services, and then we come up to a measure called GDP. So how do we add the value added? Basically, it tells you that let's say the total value of output. For instance, let's say there is a baker who is making bread. So for him, the final product is the bread, but he has used up a lot of things for making bread, like the things which are part of it, the raw material, like he has used flour, he has used the labor services, so that is also getting paid the wages. So these are part of intermediate consumption in manufacturing the particular bread. So you will basically deduct all the intermediate consumption, then you get the value added at each stage in the production process. That gives you the total value added for a particular commodity. Now this similar process is done across different sectors. So if you look at the national income accounts of India, they have classified these sectors into 8 categories, and these 8 categories, under these 8 categories, the value added are added up by taking the value of output of all these different products that are produced and deducting the intermediate consumption out of it. That's how you get the value added. Now, when you sum the gross value added across these different 8 sectors, you arrive at a measure of GDP, the gross domestic product for the economy. So this is the process by which we calculate the national income. And several other adjustments are made to GDP to find out the measure of national income. Like we make adjustments for the net indirect taxes in this measure of GDP, because this is the gross domestic product at the market value. So net indirect taxes, which is indirect taxes and subsidies, are adjusted for, and any net factor that has been earned from abroad, that gets added to find out the final national income of the country. Okay, and these are some ways that you make these adjustments and find out the total gross domestic product. So value of output basically tells you that how much sales has happened in a particular year in the country, and then you add the change in stock, basically whatever is left towards the end of the particular year, that is the closing stock, and you deduct the opening stock. That tells you that how much change or how much addition in stock has happened in the entire year. So that gives you the value of output in the economy. Now when you sum these gross value added across these 8 sectors, you get the gross domestic product. This is through the value added method, right? And these adjustments that I am going to talk about next are made to find out the net national product at factor cost. So you might have come across many times these related aggregates like GDP, NNP, NDP, and GNP. So these are, how are these related, and what exactly is quoted in the national income accounts to come up at a measure of national income of the economy? That is important. So let's look at the income method first. So income method basically adds up all the income of the residents of the economy. So there could be broadly 4 sources of income. One could be that the income which is earned by entrepreneur, right? That is, he is earning profits. Then basically there are 4 factors of production we know: land, labor, capital, and entrepreneur. So what are these income that are being earned by these factors of production, right? Land, labor, capital, and entrepreneurs. Entrepreneur earns profits, land gets the rent, labor gets his wages, and capital earns the interest, right? Broadly, these are the 4 incomes which are earned by these 4 factors of production. Now, to classify these further sources of income, we do it in the income method. So basically, the labor, okay, he earns wages. So it could be any person who is employed, who is earning wages in the form or salary in the form of cash, or any payment that could be made in form of kind also, right? And maybe his employer is contributing to some social security scheme like insurance scheme, pension scheme that is being given. That also comes under the compensation that the employee has received, plus any pension that he gets upon the retirement. So this whole category, compensation of employees, is one particular category, one source of the factor income that could be earned. Now the next is the operating surplus. So operating surplus comes by operating a particular business. So where this has broadly 3 categories. One is the rent and royalty, the second is the interest, and the third is the profits. So when you are running a particular business, you need land. So land gets rent or any royalty, right? That is paid to the land. Then interest is paid to the capital that is employed in running that particular business. And profits are given to the entrepreneurs. So these 3 together comprise the operating surplus that you get by running a particular business. And further, the profits can also be classified into 3 categories. That one could be distributed profits, which is the dividends which are given to the shareholders, and there could be a component of undistributed profit or retained earnings, which are retained by the firms or the corporates. This is also known as the corporate savings. And the third component is the profit tax, which is paid to the government, that is the corporate profit tax. So these 3 together comprise of the total profits. And a third classification is mixed income of self-employed. See, if you are self-employed, it is not easy to find out your actual income. So there is a third classification of mixed income of people who are self-employed, that you take an approximate value and add it to the total factor income. So together, adding these all factor incomes, we arrive at the national income of the economy. So when you add these different figures, you get the net domestic product of at factor cost for the whole economy. And you then just have to make one more adjustment. See, this is for the domestic economy. You need the national income. So there could be a component or the factor income which is earned from abroad, right? So that is net factor income or earnings from abroad. That is added to find out the net national product at factor cost. Then the third approach is the expenditure method. So in this approach, we basically add up the expenditures that is being done by different sectors of the economy. So different sectors of the economy, like in how do you add up the expenditure? So first is that any private final consumption expenditure that is being done by the households, that is added here. That is for final consumption, private final consumption by the households. For instance, you go and you buy some product in the market, you are directly buying it for your self-consumption. That is private final consumption expenditure. So that gets added here as part of the national income. Then next could be that any income which is coming through investments, right? So investment expenditure could either be in the form of fixed capital investment or could come from inventory investment. So inventory investment meaning that what is the addition to the total stock in that particular entire year that we are talking about for national income. And fixed investments happen, so there could be three sources or three ways of investing into fixed assets, like business fixed investment. Maybe businesses are buying machineries and any capital in order to produce goods further. So that is an investment expenditure and is part of the business fixed investment. And also there could be an investment which is done by households, like on construction. So that is done by households. That also comprises of fixed investment only, because this is going to give you return over the period, right? And any investment that is done by government, for instance on construction of roads, right? So that would also be part of the gross domestic fixed capital formation. And we add the changes in stocks or inventory investment. So this together comprises of the total investment expenditure, and this is the consumption or the final expenditure. Then the third is your government final expenditure. This is done by the government or on consumptions. So that has another different category. This is this fixed investment is by the government, but this is on consumption expenditure. That is has been classified separately here. This is not consumption expenditure. This is on investments, fixed capital assets. And the next is the net exports. So the total exports, this also forms part of the productive activity of the Indian economy, because although it gets exported but is consumed by other economies, but this has been produced in India, so it will form part of the Indian the national income of the Indian economy, for instance, if you're talking about India. And imports we deduct because this is the production coming from other economies. So that's why, although it is consumed by Indian nationals, but it is being produced. It is the economic activity has happened in other economies. That's why we deduct this. So this is broadly, these are the three methods for finding the national income. Now we know that generally through the product method and through the expenditure method, we arrive at this particular aggregate, the gross domestic product at the market price. However, if you look at the national income accounts for India, we take net national product at market price as the national income of the economy. Why do we take net national product at market price? See, earlier we used to take net national product at factor cost, but since 2016 there has been a shift in order to align with the UN norms. So basically we have now shifted from net national product at factor cost to net national product at market price, because this way the comparison across different countries becomes easier. That's why this particular measure is being taken. Now, how do you get this particular measure? How do you get the actual figure for net national product at market price? One is that you have to add the net factor incomes from abroad to this particular aggregate GDP at market price, because net factor income from abroad tells you the difference that is being earned by factor incomes, right, and any factor payments that is being done abroad. So that's why you add this component of net factor incomes abroad. Then what other adjustment that you make? Through the product method and through the expenditure method, you get the gross value, right? But your capital might have gone some wear and tear through in the entire process, right? So that accounts for the depreciation. So that's why you have to deduct this to find out what is the net addition to the domestic product, because wear and tear of capital goods also happen over a period. So you deduct depreciation out of this to find out net domestic product at the market price. Then after that, although we don't then make any adjustment in the national income accounts, right, because in the national only NFIA gets added to this to get NNP at market price. This is the national income as per the Indian national income accounts, right? But earlier what we used to do was that we used to deduct the net indirect taxes also here. Right now we don't deduct the net indirect taxes, we just quote it at market price only. So this is the national income. But earlier we used to deduct it. So there could be two kinds of indirect taxes. One could be at the production stage and one could be at the product directly. So product taxes are those taxes which are paid or received per unit of the product, whereas production taxes happen, these are paid in relation to the production. So this happens at the production stage itself. For example, any kind of subsidies that is given to railways, that is a production subsidy, right? That is happening at the production stage. Or any tax on profession, that is a production tax. So when you deduct this product tax and add the product subsidy, you get the net domestic product at the basic price. This is basic prices. And then further, when you make adjustment for production tax and production subsidy, you get the net domestic product at the factor cost. So these flow chart, these different aggregates, these relations are for understanding purposes. But you should also know that the national income for India is quoted at NNP at market price. So earlier it was NNP at factor cost. So theoretically it should be net national product at factor cost, but since we have changed the process since 2016, we quote it at market price now. Now let me ask you some questions as to what could be whether these things should be included in the national income of the country or not, whether these are included or whether these should be excluded. Now that you've understood what is national income and how do we calculate the national income and how do we make adjustments for these national income, let's discuss whether these should be part of the national income or not. First is wealth tax. What do you think? Reply in the chat section whether wealth tax should be part of India's national income or not. Should wealth tax be included in India's national income? Yes, no? So wealth tax shouldn't be considered a part of national income, because national income includes only the factor incomes. Here, any tax payment that happens, that is a transfer payment, right? And the government does not make any promise to provide any services in return for these tax payments. That's why these are not part of national income. Let's talk about another thing. Interest that is paid by consumer households. What do you think? Is it part of India's national income? Should it be included in the national income of the country? Any guesses? See, interest that is paid by consumer households. So households, they borrow to meet their consumption expenditures, right? And that particular borrowing is not used for any production activity. That is done to meet your consumption expenditure. Therefore, it is not a factor payment. All right. So it's like a transfer payment only, and that is why it would not be included in the national income of the country. Okay, let's answer another question. Whether the interest that is received on government loans, should it be part of India's national income? Any interest that is earned by the government on loans, do you think that is a part of the country's national income? Yes, no. You can reply in the chat box. See, again here government borrows to meet the consumption expenditure, and it is not a factor payment, it is like a transfer payment again. So that's why it will not be possible to include the interest that is received on government loans, right? Because this is a factor, this is a transfer payment. Now next is a easier one. Let's try to answer this. A prize won in a lottery, do you think it is part of national income? When you win a prize in a lottery, do you think that is a part of national income? See, when you are winning a prize in a lottery, all right, this would not be part of a national income because this is a transfer payment, right? It's a transfer income, and no productive activity happens when you win a prize in the lottery. That's why this will not be again part of national income. Then any farm produce for self consumption, what do you think? Is this part of national income? Yes, Priya is saying the farm produce for self-consumption. Yes, that would be part of the national income of the country. Because this is a productive activity, right? That's why you include it in national income. But see, it's for self-consumption, so you cannot get the actual value. So only the imputed value gets added up in the national income of the country. Okay, next question on old age pension. Do you think it is part of national income? Yes. Do you think old age pensions would form part of the national income of the country? See, old age pensions, first, whenever there's a question of whether it should be a part of national income or not, you look at it from the aspect of whether it's a factor income or whether it's a transfer income. Old age pension, this is a transfer payment, right? Because the receiver does not provide any good or service in return. So that's why it is not part of the national income. It is excluded. Then next is purchases of a new car. Would that be part of national income? See, purchase of a new car, this is generation of a new economic activity, right? Here it is done for final consumption expenditure. That's why this would be part of national income, because a new expenditure has been done, right? A new economic activity, hence it would be part of the national income. Next, purchase of second-hand machine from a domestic firm. What do you think? Is it part of national income? See, any second-hand machine, do you think it should form part of national income? It's a second-hand machine. So national income, we know it's calculated for the current 1 year. It's calculated for the one entire year. If it's a second-hand machine, so that means it has already been accounted for in the year in which it was produced. That's why this will not be part of national income for the current period, because it's a second-hand machine. Otherwise, it is going to lead to double counting. Purchases of shares, do you think they form part of national income? So similarly, again, if you purchase a share, what happens? It leads to transfer of funds, right? It's from one particular person to another, right? That's why, because it's a transfer of funds, it will again not be part of the national income of the country. Then any scholarship that is given to students, do you think it would form part of national income? Scholarship is like financial help, right? So without that, it's a little difficult for students to go for further studies. It's a financial help that is given. So again, it's a transfer payment that is done by the organization of the government. So again, it would not be part of the current national income. School fees that is paid by students, that would form part of national income, because this is a final consumption expenditure, and this is done for the same period, right? So this is done for services that would be rendered by the student, right? For services that would be rendered by the school. So that's why this is part of national income. Then any house rent allowance, to the teacher by the school management, do you think it would be treated as national income, as part of national income? See, allowances, as I discussed earlier in the income method, any payment that is made in cash or in kind. So allowances are given to the teacher by the school management, right? This would form part of the compensation of employees only, and so that's why this would be accounted for in the national income accounts. Next is pocket money that you receive from your parents. If you receive a pocket money, do you think it should form part of the national income? If I'm receiving pocket money, simply there is a transfer from my parents to me. Again, there's no new generation of economic activity, so this will not form part of the national income. Exam fee that is being paid by students. This is also a final expenditure, right? This is done by households on payment of services. So that's why this is also this is exam fee that is being paid by the students, right? It's a final consumption expenditure that is done by households, and that's why it will be accounted for in the national income through the expenditure angle, the expenditure method. Next is any kind of payment of bonus to school employees. Do you think it would form part of national income? Yes, because this is compensation. This is part of the compensation of employees that is given by the school. So this would again form part of the national income. Then next is income from smuggling activities. Do you think it should be included in the national income? See, smuggling is an illegal activity, right? And it's like a normal trading, right? Where that involves use of factors of production. But in practice, it is generally left out due to its non-availability of data on smuggling. But ideally, it should be part of the national income if you go by the conceptual thing. But it is left out because of non-availability of the data. Alright, then income in the form of royalty. Do you think it is part of national income? Yes, rent and royalty, this is part of national income, clearly. The next is medical expenses of employees, which is borne by employers. Again, these expenses are borne by employers, so these would form a part of compensation of employees, and hence it would be part of national income. Next is any services that is being incurred on second-hand goods. So see, second-hand goods itself are not part of national income, but services that are undertaken on dealing these second-hand goods, this would form part of the national income because these services are done in the same accounting period. Then services rendered by family members to each other, like cooking, washing, cleaning, all these services. Do you think it should form part of national income? Yes. So it should ideally be part of national income, but again, due to the lack of data about these services, it is kept out of the national income accounts. Then sale on an old house. Do you think it should form part of the national income? It's an old house, right? See, again, it's an old house, so obviously the production is not happening in the current accounting period, and that's why it would be kept out of the national income for the current period. It must have been included in the year in which it was actually produced. Then services of owner-occupied houses. This is included because house owners and producers of housing services, irrespective of whether the house is given on rent or it is self-occupied, this would form part of national income accounts. Any free meal that is given to employees, again, free meals that are given to employees, that could be of two kinds, whether it is actually needed for work and whether it is not needed for work. So if it is necessary for work, right, then it should be treated as compensation to the employees, and hence would be part of the national income. Brokerage on sale of shares. What does this represent? See, brokerage that is given on sale of services, this represents the value of the total output of service of the share, right? And that's why it is included through the production method, this brokerage that is done. Meals that is given to beggars, do you think it should form part of national income? Again, it's a transfer expenditure, no productive activity happens, so it should be kept out. It is not included in national income. Interest paid on debentures. The interest that is paid on debentures, that is a factor payment. It's not a transfer payment, hence it would form part of national income through the income method. Then any gifts received from abroad. This gifts are just you exchange hand from one person to another. So again, there's no new productive activity that is happening, so it would not be part of national income. Then dividend received on shares. This is a factor income again, that is received by the shareholder, and hence it would form a part of national income. Services of housewives. Ideally, these services of housewives are productive services, and it should be included in the national income accounts. But again, due to practical difficulties of getting data on this, it is kept out. Then next is government expenditure on street lighting. So this is again part of the final expenditure by the government, and it is included in national income. So I hope you have now some clarity on what are the things which are included in national income and what are excluded out of the national income. So see, the Oscars, we know it's the Academy Awards, right? It is given for recognition of excellence in the film industry, right? And we know that the song Naatu Naatu won the Oscar award because it is a very naturally directed song. That's why it won the Oscars. But these awards are given for outstanding performances in the film industry. But do you think the money that was earned by Olivia Morris was part of national income? As I answered the question already, this would not be part of the Indian national income account, because this is Olivia Morris is a foreign actor, and it would form part of the foreign national income, not the Indian national income, right? Okay, it is not part of India's GDP. But the fact that this song won the Oscar, okay, in case of Olivia Morris performing in this song, it has the income that is earned by the Indian film industry as a whole, including the award, that is the Oscar, for the recognition received. This would be part of the India's national income. So Oscar award plus the income that is generated by the film RRR for the song Naatu Naatu, all of this would be part of India's national income. Okay, although Olivia Morris performed in this song, but again, whatever the income that is being generated, it would represent the country's national income. But the money specifically that is earned by Olivia Morris for that particular song will not be part of the Indian national income. Okay, so basically here what happens is that because the song won the Oscar award, it will indirectly lead to an impact on the national income of the economy, because indirectly it can lead to boost of tourism and other sectors in the economy. So indirectly it impacts national income, but not directly. So I hope now you have understood. For more such interesting videos, you can subscribe to the channel and press the bell icon. Thank you.